Alvin from the Build Direct Network. We're talking about fourth quarter and how we're planning for taxes. And I'm a huge proponent of just meeting with your tax accountant quarterly because you want to go into next year already knowing what your strategy is.
Yeah, and this is question number one. Who is your tax advisor? If your answer is me, then you probably want to lock that in, and you can lock it in very quickly. Alvin and I have tons of recommendations. Reach out to us. We can point you in direction of some individuals to talk to. But at the end of the day, just like we talk about when you're investing in real estate, you want your advisory board. That tax professional is a key person there because they're the ones that are really going to support you in unlocking the true benefits and the expansive benefits of investing in real estate.
I always look at this like the future you would have a tax professional that you meet with regularly. The future you absolutely would. None of us would be listening to this podcast. We didn't think we were going to go in that direction. So if that's the future you, why don't you become that future you today? So like when I was in college, I would do my taxes myself, right? And there's not much to file, just do it myself. Then you get a little bit older, and then you're like, all right, let me go at right where taxes are due at the deadline. Let me go race in someone's office and bring all the paperwork and get it done, like in literally 40 minutes. As you start building wealth, and you start accumulating assets, you start realizing that there's a lot of advantages that oftentimes even your accountant doesn't know about, but you have to bring it up to them. And so, basically every accountant knows how to do a standard depreciation on a property, right? That's a straight line, pretty easy, straightforward. You also want to be able to go into the weeds and figure out what other expenses like repairs and things you can use to reduce your taxable income. Then you want to start looking at, bonus depreciation and see how that will impact your financial. And again, if you're having a abnormally great year and you want to offset a bonus, or, if you cashed out your in the stock market, you want to counter some of those gains. That's a really good strategy to do. And then you get even more sophisticated and you start figuring out like, hey, can I do a cost segregation report? And what are my limits that I can deduct from my income using a cost seg report? Some people are meeting with their accountants saying, you know what, my wife is a stay-at-home wife, but I can list her as the manager of my properties, and now I can take advantage as a real estate professional, even more aggressive tax benefits. So the CPA doesn't know this. They won't talk you. You have to do your research. You have to talk to people like Tim and I who can walk you through some of these strategies. But it comes from planning months ahead of time. It's not there just showing up at their office last minute.
Yeah, and it's that balance of definitely plan ahead. Here we are in the fourth quarter of the year. It's not too late, right? If you started this year saying I'm starting to invest in real estate, you still have time. I mean, before December 31st, you can immediately start taking these deductions for your 2024 tax year. And so it's not, when we think about, it's not only a means of substantial savings on the year's taxes, it positions you more favorably from a financial planning perspective for both this year and years ahead. But it's not too late. You have time if you went into this year saying, all right, I'm getting started. This is, again, where you have that team of advisors that you've put together, tax professionals, real estate professionals, someone that you trust as your lender, all of these parties together, you put them together for these very scenarios. I'm a busy doctor, lawyer, business executive, and this year's been extremely successful, but then also extremely busy. Alvin, I still need to deploy some of this income I've got into real estate. Cool, we got you. You have that team of advisors specifically set up for these scenarios. We've got, I was looking at the inventory with a client earlier today, and it's like, we've got some very compelling opportunities out there right now for someone looking to deploy that money into real estate investing. But you can't, here we are, you can't be sitting here going, oh, I missed the boat. It's too late. The year got away from me. I'll try again next year. No, reach out. Let's get going.
I'm going to be blunt. When you start investing in real estate and you start maximizing the tax strategies there, you start realizing everyone else is dumb. And so what I mean by that is that you'll know people that actually make a good amount of money, they have a good life, but they pay taxes. You know that paying taxes is an option. It's not, you don't have to pay taxes if you do the right tax strategies. And so if you think about keeping all of your earned income, not paying anything to the government. If you run the numbers, taxes are one of your largest household expenses. If you can eliminate that largest expense that you have and retain all of your earned income, how much more powerful will you be? How much more can you enjoy life? How much stronger of an investor can you be? Taxes are absolutely an option. You just have to know which levers to pull and how to alleviate yourself from that burden that everyone else
Right.
is having to pay for. And I do want to be clear for a minute because oftentimes we get pointed as a bad guy. If you ever lived in government housing or seen government housing from a distance, you know the government is really bad at building properties. They're horrible at it and they should not be involved in that industry. Yet the government still has to incentivize more housing to be developed and be created. The way that they do so is by providing tax benefits to landowners or to real estate owners, landlords, and developers. That's how they incentivize more of these activities to occur. And we are in an environment where we're short 5 million homes. So we
Right.
can anticipate that there will be more of these benefits going to investors. All you're doing is you're saying, hey, I want to provide what's good for the community that I live in, but you're going to provide great, safe housing to more and more people that on average will then bring the cost of living lower for everyday Americans. And you're saying, hey, with this extra funds, I can now pay for my vacations, I can pay for my retirement, I can cover my kids' student loans. Now I become more financial independent, so I'm no longer living off of just one source of income. There's a huge net benefit that occurs by having these benefits go to real estate investors, but you have to take advantage of them. That's still on you. And so it's not available to everybody. You have to take the steps and have those conversations and move the needle so that they benefit you. And again, taxes are an option. You do not have to pay them.
I tell people all the time, investing in real property is a patriotic endeavor. And then they look at me and go, what are you talking about? Look at the tax code. The tax code tells the story. The tax code is built to reward individuals that invest in real property. Take advantage of it. The government has built a tax code for you to take advantage of when you do it. You just got to kind of read the tea leaves and understand like it's an act. Okay, I'm not running for office, but it's an act, it's a patriotic endeavor. The government wants you to invest in their land, so do it.